This interview is for information only and should not be considered as investment advice or a recommendation to buy shares in the company featured. Welcome to this Stockbox interview. Joining us today is Jonathan Owen, the CEO of Metals One, for a special feature on the company and the projects, namely the Black Schist Project and the Rana Project. Well, thank you very much for joining us, Jonathan, today. How are you?
I'm very well, thanks, Mark, and good to see you again.
Yes, indeed. I know we've spoken a few times on Stockbox following the developments of the project here, but it'd be good to get more of a deeper dive into the Black Schist Project and the Rana Project, just to get more of an idea of what they're all about, why you're involved with them, and how you're going to hopefully build some value there. So I know you've got the new slide deck just recently published there. That's June, so very recent there. And I wonder if you can perhaps just first of all take us a very high-level overview of these two projects, where they are and why they have interested you.
Absolutely. So these two projects are cornerstone projects. We acquired them on listing in July last year. The first is the Rana Project in Norway. This is an exploration play, relatively early stage compared to our other projects, but it has huge potential in terms of volume, grades, etc. And we're lucky enough to have Kingsrose Mining as our joint venture partner, doing the work on the ground, unlocking the value in that through drill campaigns last year, drill campaign coming up shortly, and they're on the ground right now, that geochem and mapping. Our focus operationally, however, as Metals One, is on developing the Black Schist project in Finland. This is a development project, so this is not exploration. This is beyond that, more mature project, which could potentially come into production by 2030, and that's what we're aiming for. It's quite a stretch, but we believe it's achievable if we execute perfectly. So in terms of the update to this deck, that's really the focus. It's on explaining the timeline, the roadmap to get there. In terms of the drivers, really what's driving this accelerated program is the recent adoption of the Critical Raw Materials Act by the European Union. So this is an act that recognizes the need to secure domestic supply of strategic minerals within Europe and rely less on third parties, politically risky sources of supply, long supply chains, etc., etc. So they've set a benchmark for 2030 to get at least 10% of the supply of these strategic minerals, so copper, cobalt, manganese, etc., and nickel, into production for the local market, from the local market. So that's what we're looking to achieve. And this act unlocks a number of benefits if we're recognized as a strategic project, and I'll talk a bit more about that in a moment. It opens up the opportunity for fast tracking, for permitting. That can often be a small bottleneck in the road to developing mines in any jurisdiction. And it also potentially unlocks European-backed project financing further down the road as well, which again will help reduce the friction to actually getting into development and production.
Okay, excellent. I noticed that you've got the different OEMs there in Central Europe, the manufacturers there. Is the MO of the company really to lock up and help secure the raw materials needed for the EU Critical Raw Materials Act, and of course what's required for automobile manufacturers and green economy metals?
Correct, and then it's not just for the green transition that we're looking to supply; it's for the digital transition as well. These are critical metals required across a range of thematics. But yes, so we're looking to produce an end product, a high-grade Class 1 nickel sulfate, which we'll sell directly into the battery supply chain.
Okay,
predominantly
excellent.
by these OEMs. Yeah.
Okay. Well, let's talk about Black Schist then, the Black Schist project in Finland. You have this nice picture here. I know that's of the drill rig. It looks very Christmassy, doesn't it? Nice place to operate anyway.
Yeah, definitely. I took this back in December during our last drill campaign. This is near Rautavaara, near the R1 project. So this is on the R1 hook. So again, it's looking to rapidly increase the resources across this Black Schist project area.
Okay. So let's talk a bit more detail, and if you can perhaps explain a bit more about the project, where it is, what the access infrastructure is like, and really what your plan of action is.
Yeah, so let's look at the map on the right there. So the Black Schist project covers an area from Paltimo down to Ratavara. We have exploration licenses, reservations throughout this area. So on listing, we continued the desktop study, reviewed historical drill cores, aeromagnetic surveys, etc., and really pegged any high potential ground that we felt was worthy of further investigation, and that really raised barriers to other parties coming in and doing the same. So we were ahead of the curve there in that respect. Now, in terms of the two focus areas within the project, we've got Paltimo and Ratavara. In Ratavara, as you know, we've already got 28 million ton inferred resource, nickel, cobalt, copper resource there, quite a significant volume. We're looking to emulate sort of similar volumes now in Paltimo. So we've got a mineral resource estimate in development. We're hoping to release that in early July, which will hopefully give us at least a 20 million ton resource at Paltimo. Now, these together combined as realistically two separate mining operations, but one project, one asset base, will produce, based on our internal calculations, a significant return in terms of NPV, internal rate of return on a relatively low capex as well. So, in terms of where we're going with this, and I'm going to be jumping ahead to the next slide, is that once the resource estimate is out, we're going to take a view on whether we go straight to scoping study, so the preliminary economic assessment for these projects, or we continue to drill, continue to increase the resources and commission the scoping study a little later in the year. But either way, we want to get to that definitive NPV, if you like, to make the case that these are projects worthy of support by, for example, the EU funds.
Okay. When would you want to get to that NPV stage in an ideal world?
Well, the key to unlocking the funding and the fast tracking is strategic project status. Strategic project in the sense of the Critical Raw Materials Act. The next application window for that is in Q1 2025. So the criteria for that we meet in terms of the critical metals that we have in the ground. So the nickel, the cobalt, the copper. We also have a significant amount of manganese, which we're evaluating volumes at the moment. We have that in hand. We're of course meet the criteria of being within Europe, able to supply Europe. The other criteria is then to have that effectively the preliminary economic assessment in hand, independently generated. So that's what has to happen before that. That's what we wanted to attack this year, and then Q1 2025. Hopefully we'll get the strategic projects moniker, and we'll be off to the races in terms of fast track permitting, project financing, and so on.
Okay. So that's the kind of timeline for the strategic project deadline there in Q1. Okay, well that's a good milestone too.
Yeah, we'll look at the roadmap in a moment, and we'll see how that fits in. Like I said, ambitious but achievable timescales.
Okay, sure. Well, before we get into the roadmap there and some potential timelines, let's just talk a little bit more about the geology here. And I know you've got these nice models here, but first of all, black schists, what are they?
We'll get too technical. They're metasedimentary mineralized deposits. So effectively, once upon a time, many millions of years ago, there would have been a small ocean or a sea in this area. Without any oxygen in it, and this allowed the precipitation of various graphites, etc., to the bottom of the sea, and also the precipitation of metals that have been basically leached from surrounding rocks, such as the serpentinite rocks. These are then trapped in that sediment, and over millions of years, these were covered by other sediments, squashed, affected by various faulting and rifting, etc., in the area. And what we have today is almost like a coal-like substance of mineralized schists. So these are quite shallow, as you can see on the as you can see, and explain what you're looking at here. So on the left-hand side, we've got an aero magnetic survey or a conductive survey of the Paltimo area. We've got P5, which is our JORC exploration target, 1624 million ton target, sitting at the top there as a yellow rectangle. So this is looking planned, looking down on it. Uh, the black ribbon that you see then running north to south is our interpretation of where that schist continues to run. So that suggests that this ore body is open north and south, and therefore we can relatively easily increase the volumes there. On the right-hand
Okay.
side, we have the output of a study which we commissioned, internal conceptual, economic, and technical study, which I commissioned earlier this year on exactly this ore body. And what you're looking at here in the middle diagram is a cross section looking through that ore body, the P5 ore body, and then those inverted triangles or pyramids. They represent the pit walls, the walls of this mining operation,
Okay.
year by year as it gets bigger and deeper and bigger and deeper.
Okay.
And that's what the consultants use then to determine, what is the cost of extracting each of these blocks of ore over time, and they generate a cash flow discount that you get your MPV. So we've done some internal work on this already. We have a good idea of where this will go, and of course, this is a requirement before you start investing many tens or hundreds of thousands in studies. We want to make sure that this is good
Mm.
money going after good projects.
So the inverted pyramids, that's a conceptual pit, a visualization.
Correct. Yeah, that's right. And then
Okay.
the ore body is the color block in the middle. The
Yeah, the
color
blocks. So the darker the blocks, the more mineralization.
in this case, yeah, but
Yeah.
it's all
Okay.
relative. It's these are all high for us. If it's black schist go, these are all high grade blocks. Yeah.
Okay, okay, okay. So you're already fairly well advanced on this. So I mean, in terms of, I mean, maybe it's too early to talk about how to extract, but I want to get an idea of what it could look like, because that picture earlier where we saw the drill rig in the snowy forest there. So it looks flat. It's not sort of mountainous from what I can gather from that picture. What is it like? What sort of the terrain like, and how would it look? Are we talking hard rock here? Are we having to blast, or is it excavators digging out? How could it look in terms of actually getting down and extracting this ore?
Yeah, it's flat. Most of Finland is flat. It's scoured by glaciers many
Hmm.
times over the millennia. The ore body itself is as you might infer from the diagram here, is outcropping. It's actually at surface, maybe with a
Okay.
few meters of glacial till or gravel sitting over it, but it's easy mining in that respect. But it is a drill and blast operation.
Okay.
So it's using traditional mining techniques that have been used in this area for for hundreds of years. We've got the skills, competence of service providers in this area. The infrastructure as well, road and rail to support it.
Okay.
But it is a traditional open pit mining
Okay.
operation. Yeah,
Open pit. Yeah.
low
You
risk,
blast
low
it. You open
cost.
up the pit. You extract the ore. Would you be
Yeah.
looking to process that ore, or effectively just sell it as a mine
No,
gate, so to speak?
we'll process it. We'll process it on site. Again, it's a low cost, easy process. It's bio heap leaching. So we take the ore, we lay it out in pads, sort of football pitch size pads, and percolate bio basically bacteria in a solution through this. Or that leaches out the metals. The bacteria leach out the metals, and we take that solution, put it in a reactor, basically a big vat, and
Mm.
precipitate out those minerals. And then what we have at the end are hydrosulfides. So we have nickel sulfate, copper sulfate, cobalt, etc., in a very pure form, which we then sell
Okay.
directly into the battery supply chain. So into the battery producers. There's
Okay.
no
Okay.
with a gold or a mine, for example, a copper mine. Typically, you'd send that then off to a smelter. There'd be an intermediate step where they refine it further and then send it on to the end customer, the end user. We don't have that. So we're very much self-contained. The process itself is straightforward, low cost, low risk. And we'll talk about terra firma in a moment. There's a slide on there I've included in this deck, because I
Mm.
think it's important, because there is an existing mining operation or processing operation local to us. They're already extracting these black schists, and they perfected the process, and they've
Mm.
demonstrated that they're producing some of the lowest cost and lowest carbon intensive metals globally.
Okay.
And that's a hugely important factor when you're considering that the whole point of this Critical Raw Materials Act is to support the digital and the green transition. So low
Mm.
carbon, it's
Yeah. Sure.
it's a requirement.
So potential to use their processing facility potentially?
Well, we don't say we don't need to. The
Okay.
process, the facility is quite small. It's relatively straightforward.
Okay.
Uh, the
Okay.
likelihood is we will have or the way it looks at the moment is we'll have not just one mining operation. Probably have multiple, staggered over time. So maybe start with P5 here, build the mine, get into production, move down to
Okay.
Rantabara, build that, and each will be self-sufficient. It'll be, it'll
Okay.
have all its downstream processing
Okay.
plant around it and with it.
Okay, excellent. Well, if we can talk about the proposed timeline, then of course that the work you need to do to go further down this value curve and what that entails, what you need to prove up to get further evidence. So perhaps just take us through, yeah, what stage you're at now and what you've got to do to get to the next milestone.
Yeah, well, I've kind of looked at it. We looked at in the reverse. So if you set your benchmark, your target is 2030, and then create the countdown schedule to how you get
Sure.
there. So that's the typical project management technique. Then what we what you soon realize is we have to really get moving now, and we
Mm,
have been. So in terms of this year's work package, we've got the mineral resource estimate for P5 that we're expecting in July. As you might remember in previous interviews and announcements, we inherited a data set for P5, drill core samples, etc., that weren't assayed correctly by the previous owners. They'd use sort of less sensitive equipment to assay those samples, to come up with the grades, etc. So we've had all those samples sent off to an independent laboratory. They went through the process of assaying those chemically, so that's the gold standard of assays. We received that data set as previously announced, and then appointed Mining Plus to do the resource estimate based on this new, more confident data set. So that's what we're expecting to receive from them in July, which will then, of course, get published to the results will get published immediately to the market. This will then give us basically an idea of the volumes and tons and the grades that we're sitting with at P5. We've already got the R1 Rantabara 20 million tons. With those combined, then the question is, do we have sufficient volumes then to underpin the scoping study, or will we need to maybe drill a few more thousand meters to increase those volumes? I suspect we might have enough, and we'll go straight to the preliminary economic assessment. So, resource estimate in hand, that will underpin the preliminary economic assessment. So, whoever undertakes that, it might not be Mining Plus. We'll go to tender on that piece of work. We'll take that resource assessment, and we'll start actually building a more detailed mining operation, virtual mining operation around this data set, and basically calculating what the costs are going to be, over what time frame, what's the strip ratio, what's your labor costs, etc., and
hmm
ultimately come up with that NPV and the IIR and the capex for that project as well. So this is just a scoping study. So while they come up with these numbers, the accuracy might be plus or minus 20%.
hmm
So you might not necessarily go down to your local bank and borrow on the back of that business plan. So typically you go through a number of stage gates before you get to that final investment decision, and that will be the pre-feasibility study. So you take what you've got there as a model, business model, and you refine those numbers. You really hone down on the accuracy on the numbers that you're using, your input costs, etc., fuel costs, labor costs, and then you come up with a more accurate NPV. And then there's the full feasibility study, which basically is continuation of the feasibility, the pre-feasibility. Continues to
hmm
nail those numbers down, but we're also bringing in the permitting as well. So the permitting gets done during the feasibility study, and at the end
hmm
of the feasibility study, you've got your business model, which is maybe accurate plus or minus 5%. You can take that to the bank, and you've got your permits in hand, and you can
hmm
make that final investment decision. Are we going to do this? Yes. Off you go and build the mine and get it into production. So that's the process that we go through. I mean, throughout that
hmm
process of scoping study, pre-feas, and feasibility study, we do continue to drill, but this isn't necessarily exploration drilling. This is resource drilling. This is about just
Yeah.
continuing to increase the volumes of resource that you've got. So that will continue in parallel in any case.
Okay, excellent. Well, it's definitely a clear timeline there. Just in terms of what's to come, we've got about sort of 6 months or so left of this year. You want to get that resource estimate done, and potentially that scoping study in time for the EU strategic project recognition. So, is that like a pitching process that the EU sort of you have time, a window to sort of put your pitch in, and then they look at it and assess it?
Yeah, correct. So there's the one window that's open right now. So it's only just as a process
Yeah.
being kicked off. So we had the kickoff presentations only weeks ago. So the first window is open now until October. It's unlikely we're going to get the scoping study completed
Sure.
before that window closes. So our next opportunity is then January
Okay.
2025, with a decision I believe they will make in the end of that quarter. So that's what we're
Okay.
aiming for. Um,
Okay.
and that gives us an important recognition. But nevertheless, we still continue on through with this
Yeah, sure.
timeline. In any case,
And that recognition, what does that mean? I see the footnote there that's a mandated fast tracking for strategic projects. So, I mean, does it unlock potential funding or drop regulatory hurdles? What kind that kind
yeah,
of
it
thing?
it drops regulatory hurdles.
Okay.
Yeah, exactly that.
Okay.
We have to, as you know, as a prudent management team, we have to assume we're not going to get it in terms of how we plan.
Sure.
We have to assume that we're not going to get that fast tracking, and therefore we are front loading all the various studies, environmental studies, etc. We're front loading those into our work program as much as we can, given where we are in this sort of resource estimate slash scoping phase. So even if we didn't get the strategic project recognition, we should be on track in any case.
Okay. Okay.
But yes, it also opens up EU-backed project financing, which would likely come in sort of later at the later stage, sort of pre-feasibility stage.
Okay. Okay. That makes sense. Well, it's always nice to compare what you potentially have to existing operators or peers, let's say. So I think this slide sort of demonstrates that, doesn't it?
That's the intention. That's the intention. Correct. So try to, in the attempt to compare apples with apples, it's always a challenge because every operation, every mine, every company is unique, and every jurisdiction is unique. But if we look at ourselves in terms of where we are in maturity, so you have your greenfield, your exploration plays out there on AIM, who are going out and drilling and looking for assets, looking for ore bodies or targets, and then investing in those and developing them on. You have the companies that have actually found something, like ourselves, who are then looking to take it to the next stage, take it through that sort of development process, and that's where we are. So, and that's in that discovery phase. I'm looking at the timeline at the
Yeah.
process right at the bottom there. And as we move through the scoping studies, we'll be in that sort of definition phase. So
Okay.
throughout that process, uh, you'd expect to see your enterprise value increase significantly as basically confidence increases in what you have in the ground and the business model, and also the value of what you have in the ground increases as you continue to
Okay.
resource drill. Um, so you've got to throw the net a little wide to find those equivalent peers, and the ones that we're aware of are predominantly on TSX, on the Toronto
Mhm.
Stock Exchange. And
Mhm.
we all have different volumes of nickel equivalent in the ground, etc. But if you see where we're at the moment, this is just with our one, with a 28 million ton resource that we have. There's about 100,000 nickel equivalent tons in the ground. So nickel, cobalt, copper, equate that to nickel equivalent tons in the ground, about 100,000 tons. With the resource estimate that we're expecting shortly, that could potentially double. I say potentially, I'm
Okay.
not going to put any numbers on anything. And that would bring us into the ballpark of, for example, Eagle's Nest, and maybe towards Shakespeare, both in Canada. And they're sitting on markups at the moment. I mean, Eagle's Nest, maybe that's an outlier at £471 million markup. Shakespeare, 77 million pound markup. Maybe that's more realistic. We're currently sitting at three. So,
Mm.
there's in terms of being undervalued. I mean, that to me is hugely telling in terms of where we can go with this. I think the resource estimate we have coming out in July should be the catalyst for a major for a major inflection point for the company in terms of
Yeah.
the market valuation.
Yeah. Okay. Well, that is a big milestone point, is when you get that resource estimate out. It's proof there of what is potentially in the ground. Okay, it's nice to see those different projects there. They are all on the most of them on TSX, ones on the ASX, but it's good to see different comparable projects. Of course, your neighbour as well, Terra Firma, is next door. They're a producing mine. You've mentioned them a couple of times. So let's talk about them a little bit, because their deposit's going to be very similar to yours. You're going to effectively have quite a similar operation, I guess.
Exactly that. The,
Okay.
the black schist, the minerals that we have are for for all purposes identical, very similar in
Hmm.
terms of grades and the geochemistry of this, and also in terms of how they sit in the ground, shallow, easy digging mining. So
Okay.
Terra Firma came into production only a few years ago, and they've already demonstrated. You look at the financial results quarter on quarter. They've been producing an EBIT 25%, 30%, 32% quarter on quarter during what most people consider a downturn in the commodities markets, particularly with nickel. So they've demonstrated that they are a first quartile producer in terms of low cost.
Hmm.
They generate free cash flow throughout the commodity cycle, and also at the lowest carbon intensity globally. And we hope to emulate that. People ask, well, why don't Terra Firma just expand their operations? Why do we need another operation? Or why do you need more than one gold mine in the world? It's due to constraints. So they are constrained by infrastructure, constrained from expansion. Also consider the capital outlay, the processing plant, the mining fleet, the trucks, the loaders. Everything has been designed and sized to this size of operation. It's very hard to quickly expand an operation without basically rebuilding everything and reacquiring new larger fleets of equipment.
Hmm.
So that's the challenge that they have. But like I say, they do it very well. They've created or reinforced a very good reputation for the mining industry in this part of the world. And we experience that every time we go visit the municipalities in Baltimore and Ratavara. They're very keen to have more projects like these on their doorstep, because they're a lot of these regions. They've suffered from decades of population collapse, if you like, of people moving out of these areas, and they want to bring people back in. And a project like this, the Terra Firma project, employs around about 2,000 people directly and
Hmm.
indirectly. So they're significant contributors to the local economies.
Okay. Okay. And do you know much about the development curve that Terra Firma went through in terms of building out their resource and ultimately funding it into production?
Yeah, they started very much like we are. They
Okay.
started with a small 20 million ton resource. They built on that and took that through the stage gates that we will be now through the various studies. And in the meantime, they continued to drill and drill, and they ended up with a billion ton resource, which is many billions of dollars worth of metal in the ground.
Okay.
So they paved the way for us, really, which
Okay.
for us technically and economically de-risks the project, which was what attracted us to it in the first place.
Okay. And do you know how they funded the operation and actually built, met that CapEx requirement?
Yeah, so Terra Firma is a joint venture between the Finnish government and Trafigura.
Okay.
So the Finnish government uh, built the mine and brought in then Trafigura to contribute and to
Okay.
help set this up. And whether that's something that we'll do, we'll down the line, we'll see. Maybe
Sure.
we take it through to production ourselves. Maybe we JV with a Trafigura, Glencore. These
Okay.
are very
Okay.
attractive projects and jurisdictions. It's one of the most attractive mining investment jurisdictions globally.
Okay.
Or we simply, um, uh, sell the project at the right time for the right price.
Okay.
Whatever's best for the shareholders in that situation.
Okay, excellent. And in terms of what's to come with Black Schist here, you're hoping to get that resource estimate out in July. Is all the work done for that in terms of the actual work on the ground? I mean, it's more desktop work now, is it?
Yeah, correct. So the Mining Plus team, you might have seen the social media posts that we've sending out. Have been on the ground last week,
Hmm.
doing the what they call the ground truthing. So ensuring that the data set that we've given them is underpinned by actual, real drill cores, and
Sure.
correct logging, and which includes actually going out to the site and checking the GPS locations of the drill holes, the collars and the drill holes, the azimuth and direction in which these drill holes have been. So it's quite a detailed investigation they do. That gives them the confidence then to back the numbers. So they're
Okay.
currently back in Bristol in the UK, building that resource estimate up, and like I said, we're hoping to have that released to the
Yeah.
market in early July.
And that will feed into the next stage. And what could potentially the next stages look like? You talked about potentially getting the scoping study started this year, but depending
Yeah.
on the results of the resource estimate, will that determine whether you do more drilling or focus the exploration in a certain way?
Correct. So the um, once we have this information, the resource estimate numbers and grades, etc., back in early July, we then need to make a call. Do we have sufficient metal in the ground to underpin the business case to go and mine this? So do we, can we kick off that scoping study immediately, or do we need to immediately add other volumes, other tons to that before we initiate the scoping study? So that'll be a discussion we'll have with the consultants
Okay.
then. Um,
Okay.
in any case, the plan is to have that scoping study kicked off this year, whether
Okay.
it's in the next couple of months or whether it's next quarter or Q4. We will see. That's the decision that we have to make.
Okay.
It might be the case that we kick off the preliminary economic study and continue to drill and should just constantly feed that data into the
Okay.
study as it develops over the coming months. So we're exploring all options at the moment. Ultimately, we want to get the study completed to a high quality, high standard, with high volume as soon as possible.
Well, thank you very much, Jonathan, for going through everything on Black Schist. That's a really great picture of where you are and what the company is planning to do. I know we want to talk very briefly about your other project, which is not your direct, it's a joint venture, isn't it? So it's not a direct project for you, but it's the Rana project in Norway. So just quickly, we can go over what this project's all about and how much involvement Metals One have, and ultimately what you'd like to see from this project.
Yeah. So Rana Project is equally exciting in different ways to the Black Schist. So as I mentioned, it's an earlier stage project. It's an exploration project as opposed to a development project, but it has a lot of potential. So it is recognised uh, as one of the most important nickel sulfide deposits globally. It was previously mined by Outokumpu. The Proven mine sits within our tenement area. And it's equated to the Voisey's Bay mine in Canada, which is owned and operated by Barley. So that is one of the world's largest nickel mines. And we're looking at something very similar potential in terms of the chemistry, the geology, but also in terms of the potential volume. So very exciting, like longer term play, but it is a real company changer. Should Kings Rose discover what we hope they will. So Kings Rose are our JV partner. They're the farming partner. They're paying for the work on the ground and executing the work on the ground. Currently, we sit with um, the major shareholding. That will change as they move through the various farming milestones. And they have been drilling already. As you know, they actually got ahead of themselves and drilled prior to our IPO in July. Started the drill program, which is great to see that commitment. Very professional team. They drilled through to the end of last year and expect to be drilling again now in August, September time. The team is on the ground doing the work, the geochemical soil surveys and mapping on the ground right now. So they are active, but we're really looking forward to the next drill results in the coming months.
Okay, good. And really, this is down to the partner Kings Rose to carry on with. Really, you just really do you have a free carry almost?
Yeah, with free carry participation, so it costs us nothing. Of course, we seed
Yeah,
shareholding as they invest, which is perfectly
yeah, you
reasonable.
back your corner. Yeah, okay, yeah,
Um, but no, very very pleased with their approach, with their commitment. This is their cornerstone project in their portfolio as well. So
excellent. Okay, good, excellent. Well, thank you very much, Jonathan. And this is the final slide in this deck you recently updated. Right location, right time. And yes, I would agree with that, given where we are with the mark, the commodities here required for the green economy, the net zero shift, and the European Union, the moves that the European Union are making in this space. And you're right in the heart of the European Union.
that's absolutely
Well,
right.
thank you very much, Jonathan, for your time today. It's been a pleasure talking.
Thank you, Mark.
If you enjoyed this interview, then give us a thumbs up, a like or a retweet. Subscribe to us on YouTube or follow us on Twitter and hit that notification bell to be the first to know when we release new content. There's loads of great content on our website too, across all our programs at stopboxmedia.com. Thank you for watching.